Thanks so much for tuning into the Trade Setup. Good morning to everybody. Let's get down to business straight away. First, the key newsmakers from around the world. US has said that they are going to move about 3,000 troops closer to the Russian and the Ukrainian border. So that is one thing. Eurozone inflation has unexpectedly hit the record, and therefore it boosts the rate bets on the upside. And oil retreats from fresh 7-year highs, even as OPEC Plus hikes output. When I saw the US news, I thought maybe that could inflate oil, but I think because of the hike in output, oil prices have come off a little bit from the highs that they were trading at. Now, what is it that the markets have done? Well, actually, the world markets did reasonably okay for themselves in yesterday's session too. If you just look at the print of last night, Dow, S&P, Nasdaq, I think all three were okay. All three were doing reasonably fine. So no issues on that front. The US markets will come up on your screen. But while the markets did what they did last night, after hours trade, spoiled by Meta or Facebook's earnings, which was down about 22%, all of those markets have retreated. In fact, the Nasdaq, if I'm not wrong, is down about 1.7, 1.8%. So the mix of this US troops moving closer to Ukraine, Nasdaq beat down, etc., tempers the optimism, if you will. Now, Asia still has limited trade because at least the Chinese markets aren't working. So what is working is ASX and Nikkei and Kospi and some of the others, and there the picture is mixed. So don't look at CSI 100 and Hang Seng, but the others have a bit of a red to themselves, if you will. Actually, a bit of a mixed trade out there, right, if you will. So, and which is why what SGX Nifty is doing, again, a bit choppy and volatile, but maybe look at that and don't look at the Asian screen as a lead indicator, because Asian markets were shut for so many days. We've had a few trades. We've had a good upsurge in this week. What is the SGX Nifty showing today is the key parameter. And for now, a flattish trade, maybe marginally on the downside. This also, as I said, has been a bit choppy and volatile, because I think at some point of time, the markets are worried for precisely these two things: what the US markets did overnight, and of course, this news around the US troops moving closer to Ukraine. Geopolitics at times tends to impact the market sentiment, and maybe this morning was no different. But as of now, flat as she goes, steady as she goes for the Indian equity markets as well. I'm not getting you the MOV function today simply because what the markets did in terms of trade yesterday may have little bearing on what we do today. So let's get straight to the trade setup. I think the Indian cues are strong. FI selling low, the kind of PCR and the options trade, as well as how we close at the highest point of the day yesterday. All of that is great cues, but the trend is countered by the tech sell-off in the US and geopolitics. I think select FMCG could be at play in the session today. Normally, a sector which comes to the fore when there's a bit of a risk averseness. Add to that the kind of earnings that Tata Consumer has put out, or the commentary thereof. Titan is not strictly FMCG, but kind of expected to give good numbers today evening. So all of that somehow makes me believe that FMCG could be at play in the session today. And whenever I speak to, whatever dealers I speak to, everybody's talking about two things: real estate and old economy, be it capital goods, be it construction, maybe even cement. So old economy and real estate are the sectors that have seen continuous buying at local dealer desks, by the way, not FI dealer desks, local dealer desks. So keep that at the back of your mind. Equity flows, as I said, have ebbed a bit the last couple of days after seeing close to 40,000 crores of selling, if I'm not wrong, in January. I think the last couple of days we've been pretty decent on the FI selling side, which is actually not bad news. Results today: ITC and Titan, and one more reason why FMCG would be at play. And then, of course, a bunch of other non-nifty names. I would watch out for Lupin. I would watch out for PI Industries and Godrej Properties. There was some rumor yesterday about Godrej Properties likely to buy a Mumbai-based real estate company. Could that come to the fore? I don't know. It'd be interesting to see that after Jubilant Foodworks disappointments, what would Barbecue Nation or a Westlife do in the session today? There's also Varun Beverages thrown in the mix, and Prince Pipes and Fittings. It's had a lovely run. Can the results deliver? And after Apollo Tyres disappointments, would JK Tyre disappoint as well? So almost almost all the companies in the fray today have some or the other news specs surrounding them or peer plays surrounding them, and therefore could be very interesting. To my mind, the stock of the day has to be Tata Consumer Products. The Morgan Stanley says that the results are a miss, but the guidance is strong. But I thought when I looked at the numbers that the 5% revenue growth, the expansion in margins, as well as a 21% net profit growth is actually fairly enthusing. Yes, it could have been a bit lower than what some individual brokerages would have thought of, but by and large, the numbers seem good. And I thought that the key factors that the other pieces, like Tata Starbucks, for example, after years or quarters of not quite out there, is now EBITDA positive. It's very close to PAT break even in Q3, which is actually a very good factor. Remember, Tata Consumer as a stock is off nearly 18% from the recent highs. So that's the other factor that might work in the session today. So much as um, a couple of brokerages might have thought that the earnings are below estimates, I think a few factors, including the fact that the stock has corrected from the recent highs, may mean that the stock actually does well, which is why I thought it qualifies as one of the stock of the day. There are others, by the way, on the good side, Maharashtra Seamless, on the bad side, Apollo Tyres, which qualify as stocks of the day. But I thought Tata Consumer, liquid, decent performance, watch out for this one. Speaking of Maharashtra Seamless, I've brought that up right up simply because of the kind of numbers that it has put out. So Maharashtra Seamless revenues at 1139 crores versus 562. There is EBITDA at 139 versus 86 crores. Again, strong growth there. And the profit after tax at 104 crores versus 52 crores. So that's also actually very good news. And by the way, I'm just looking at some internals for Maharashtra Seamless. The seamless pipe sales were up 36%, and the ERW pipe sales were up 21%. In fact, the seamless segment reported an EBITDA per ton of 62% growth, which is all very strong. Remember, the stock was up yesterday, so you've got to keep that in mind. Also keep in mind that while the numbers are really good, the stock is not a very liquid stock, so you can't really trade quantities here. So bear that in mind if you decide to trade this one. But yes, the cues are very, very solid for Maharashtra Seamless, so could be reacting today. M&M Financial, I thought the numbers looked okay too. NI up about 16%. There's a net profit versus a loss. I think some of the internals looked okay as well. Do watch out. This one may react, but I suspect that the street knew about these strong numbers, so you've got to keep that at the back of your mind. Some weak earnings included Adani Total Gas, wherein the revenue was up 36%, which is strong, but the margins saw a really sharp crack, 23% versus 35.7% for Adani Total Gas. And it'll come up on your screen in a moment. This is M&M Financial. For Adani Total Gas, revenue is very strong, but margins completely cracking. And the profit after tax at 127 crores versus 158 crores, down about 19% too. The markets haven't liked weak margins, and there's a slew of companies with weak margins this quarter, so could correct. The other one is Z Entertainment, wherein revenues are down 23% at 2112 crores versus 2729 crores. Margins to 22.4 versus 23.1, and the net profit down at 25% at 298 versus 399 crores. So the numbers certainly very, very weak. I didn't bring the estimates here because I just find it a bit difficult to assume that people, after all that Z is going through, would be able to correctly assess what Z's numbers would look like. More often than not, the last 3 or 4 quarters, I've seen the Z's reported numbers being way off from what the consensus estimates were. So I'm not getting you Z versus estimates. Z individually, the numbers left a bit to be desired. But the point about Z Entertainment, viewers, is that it's now close to the Sony's price, and therefore if it corrects quite vehemently on a good day, it bounces back very, very strongly. So bear that at the back of your mind if you're wanting to trade Z Entertainment. Right here, yep, about 292, so very close to that 300 rupee price. And as you can see, the gyrations there. So be careful if you're trading this one. Weak set of numbers by Gillette India as well. Revenues at about 563 versus 520, that's okay. But margins 20% versus 37.5%. That's a huge drop in margins, and therefore consequently a very big drop in PAT as well. 26.5 crores versus 41 crores. Not the best of performances. Some other stocks which I thought did reasonably okay. So Triveni Engineering, the PAT was up 38% at 130 crores versus 94.66 crores. So those numbers were okay. Awadh, compare that to Awadh Sugar's numbers, and Awadh comes out smelling like roses. Look at that PAT number, 8.5 times growth in PAT at 28.86 crores versus 3.72 crores. Really strong show. So relatively, compared to a Balrampur or a Triveni, Awadh Sugar has done well. The stocks have done quite well thus far. I still believe that our sugar could react positively. So it could actually have a bit of a gap up. So I don't know if there's a trade there. But yeah, good performance on the bottom line. And Balaji Amines I thought was very interesting simply because yesterday Alkyl Amines had a very sharp drop in EBITDA margins, or nearly 2,000 basis points if I'm not wrong, whatever. But Balaji, the PAT is up 28.75%, which is great, and the margins dipped only 200 basis points. So clearly, this company did well. Now, whether some of this impact is felt in Q4, and difficult to figure out. I haven't been able to get down to the underlying fundamentals of why Balaji has done this versus Alkyl, but I just thought notable it was that Balaji Amines did so well compared to Alkyl Amines. Maybe it shows in the stock price today. Let's wait and watch. What will it definitely show in the stock price today is Apollo Tyres, viewers. Two reasons. So one, very weak numbers. Revenue is up 10%, which is fine. Look at the margin drop, very sharp. Net profit down 50%. So clearly the quarter was not good. It's showing, and from the way the other raw material prices are right now, be it crude or some of the other allied factors, doesn't seem like the raw material pricing pressure is over. And the fact that autos are not in the fast lane as yet means that maybe the pricing bar is not there with the companies. But it is on pricing itself that is the next piece of news. There's a CCI penalty on the tire companies, on almost all of them. So therefore, Apollo Tyres has two big drawbacks to it. Let's wait and watch if this one has a big correction in the session today or no. I haven't quite looked at the fundamentals of Bharat Dynamics, but I thought it was interesting that the company signed a contract with Indian Army for manufacture and supply of Conquerors, which is guided missiles to the Indian Army, worth 3,100 crores. That is big for the biggest of the companies. So I'm sure for Bharat Dynamics as well, it's an interesting one. Watch out. And just the indigenization of Indian defense, I thought that is why it was important, irrespective of which company it is, but just the fact that the government seems to be walking the talk, which is very interesting. Bharat Dynamics in the last 1 month has gained about 24%. So you have to keep that at the back of your mind, but doing okay. Last couple of things before we wrap up. One of them is Jubilant Foodworks. I remember it's already cracked a little bit on the back of the numbers yesterday, but CLSA downgrades it to a sell with a target price of 3,190. And the reasons out there on the screen, they're saying that the competitive intensity is firming up and the slow progress on new initiatives. The margin pressure led us to cut FY22-24 earnings estimates by 12 to 14%. Rising competition, expected multiples contraction for consumer discretionary stocks leads us to the downgrade. This is a CLSA view. Interestingly, Morgan Stanley had a tactical buy on Jubilant Foodworks. I think that call has gone wrong. Let's see what happens to Jubilant Foodworks in the session today. What happens to some of the others, right? Because the Westlife and some of the others come out, that the dynamics for them may be slightly different than Jubilant, but still, since Barbecue Nation, Westlife both come out with numbers, could be interesting to see what happens there. And viewers, just lastly, watch out for Tata Steel. I think there's some news around Dutch public prosecutor opening criminal investigation into Tata Steel. Maybe that has a bit of an impact. Let's see. Stock has done reasonably okay. As I said, metals were in a strong show, but maybe Tata Steel has some impact. Yeah, 1167. It's actually had a fairly heady, at least had a fairly heady move on the first, and then has sustained. Can it come off a little bit? Let's wait and watch. Net, that's the long and short of what the markets look like. Before we wrap up, just very quickly, there's this chart on the Bloomberg terminal. While Nasdaq has come off quite vehemently in after hours trade yesterday, the beauty is that because of the earnings growth of some of these companies, the PE ratio has actually trended lower, even over a 10-year run up, which is quite astounding, and maybe that gives a bit of a comfort to what people believe has been a very strong run up over the last 10 years. Earnings growth, the market loves that. Thanks so much for tuning in today. Have a safe, profitable day ahead, and if you're stepping out, please stay master.